Let's start with a paradox. The smarter you are in trading, the more likely you are to fail. Intelligence is your biggest enemy in trading. Yes, you hear that right. In a world obsessed with analysis, strategy, and market knowledge, most failures don't come from ignorance, they come from within. The smarter you are, the better your brain becomes at creating logical justifications for emotional decisions. You don't lose because you don't know enough. You lose because your brain was built for survival, not for trading. This is the same brain that, thousands of years ago, learned to fight or flee at the first sign of danger. Now we've brought that ancient survival system onto a trading screen where every price fluctuation feels like a threat to our existence. And it's in those moments that the smartest people make the dumbest decisions. This isn't about fear and greed. It's about the hidden war between two halves of your mind. The part that knows it should stay calm. And the part that screams, "Do something! Now!" Trading is the battlefield where these two collide. Where success depends not on knowing more, but on rewiring your own brain. That's why trading psychology isn't just another skill. It's the final, unbreakable frontier. Here's the hard truth: knowing the right move doesn't mean you can make it. During a trade, your brain is literally at war with itself. On one side, you've got the neocortex, calm, rational, logical, whispering, "Stick to the plan. Follow your rules." On the other side, the limbic system, ancient, emotional, impulsive, is yelling, "Run! Attack! Do something!" When the market turns chaotic, your limbic system hijacks the controls. Cortisol floods your bloodstream, adrenaline spikes, and your logical brain gets shoved into the back seat. You're no longer the disciplined trader, you're a panicked animal trying to survive. And that's why the market punishes even smart people. You can know exactly what to do, and still fail to do it. Science backs this up. In a study of professional traders at an investment bank, researchers found that those with elevated testosterone levels after a winning streak took 28% more irrational risks than before. Their biology literally turned against them. Confidence morphed into overconfidence, logic into greed. So next time you're in a trade and your heart's racing, remember, you're not just fighting the market. You're fighting millions of years of evolutionary wiring designed for survival, not profitability. This time it's different. The most dangerous thought in trading. Why do we keep telling ourselves, "This time it's different," even after losing 10 times in a row? Because your brain is wired to find patterns, even when none exist. It's the same reason you see faces in clouds, animals in wood grain, or meaning in pure noise. Your mind is a pattern recognition machine, a survival mechanism that once helped our ancestors spot predators in the grass. But in the market, that same instinct turns against you. Here's how it plays out. After a few winning trades, your brain whispers you've cracked the code. Confidence starts to inflate. You loosen your risk management, double your position size, and convince yourself the market is finally making sense. Except, it isn't. Markets are chaotic, probabilistic, and mostly random in the short term. Your wins weren't proof of mastery, just statistical noise wrapped in emotional euphoria. This illusion of control is one of the most seductive traps in trading psychology. It blinds you to risk, fuels overtrading, and keeps you chasing ghosts of patterns that never truly existed. The best traders don't fight randomness, they respect it. They understand that the goal isn't to predict the next move, but to survive long enough for the probabilities to work in their favor. The fix? So how do you escape this mental trap? Use cold, objective metrics. Track your performance with data, not emotion. Look at your Sharpe ratio, win or loss consistency, and maximum drawdown. Numbers don't lie. They reveal the truth your brain tries to hide. Never trust your gut feeling. That instinctive rush you feel after a win or loss isn't intuition, it's chemistry. Dopamine, cortisol, and adrenaline flood your system and distort perception. Your brain will tell you stories, that you've found a pattern, that this setup feels right, that you're due for a win. It's lying. Build a trading system that doesn't require you to feel anything. Let data, backtesting, and rules make the decisions, not your hormones or hope. Because in trading, discipline beats brilliance. The market doesn't reward who feels right, it rewards who acts right. Your brain hates being wrong. It will go to astonishing lengths to protect itself, even at your expense. When the market moves against your position, something remarkable happens. Your mind refuses to accept the loss. Reality becomes negotiable. Suddenly, you start telling yourself stories. It's just a pullback. No, it isn't. If I wait a bit, it'll come back. It won't. Your stop loss has already been broken. I'm just giving it time. The market owes me this one. The market owes you nothing. This isn't mere stubbornness. Neuroscience proves it. fMRI scans show that financial losses activate the same regions of the brain that light up when we feel physical pain. Losing money literally hurts. Your mind prefers illusion over discomfort. Cognitive dissonance is your brain's survival mechanism backfiring in the market. Instead of protecting you, it keeps you trapped in losing trades, rationalizing bad decisions to avoid emotional pain. The result? Bigger losses, missed opportunities, and a cycle that repeats until you learn to recognize it. Awareness is the first defense. Once you see the trap, you can act deliberately, accept the loss, follow your rules, and detach from the emotional grip of being right. Why experience alone isn't enough. You've probably heard the 10,000 hours rule, that practice makes perfect. In trading, that's a dangerous myth. Experience alone doesn't guarantee mastery. Many traders spend years repeating the same emotional mistakes because experience without reflection is wasted effort. The brain is a pattern machine. It will keep looping the same behaviors, even the wrong ones, unless you intervene. For instance, if you don't keep a neuroemotional trading journal, recording not just what trades you made, but how you felt and what you thought during each step, your brain has no chance to learn. Mistakes get ingrained, biases go unchallenged, losses repeat themselves. The antidote is deliberate practice. It's not just trading, it's trading with reflection and structure. After every trade, ask yourself, before the trade, did I define my entry and exit conditions clearly, or was I guessing? During the trade, did I act based on emotion, or did I follow my plan? After the trade, which cognitive biases affected my decision, and how can I prevent them next time? This is how experience becomes real skill. By observing your mind as closely as the market, you stop repeating mistakes unconsciously and start training your emotional and cognitive muscles, not just your trading account. You can't eliminate emotions, that's impossible. But you can train your brain to respond differently. Mastering this is what separates the consistent traders from the gamblers. Here are some of the most powerful mental tools. Pre-commitment. Remove the temptation to second-guess yourself. Use OCO, one cancels the other, orders or preset stop-loss and take profit levels. Once the plan is in place, your manual interference is limited, and your emotions lose control. Crisis simulation. Mentally rehearse worst-case scenarios. Imagine a 20% drawdown or a sudden market crash. By visualizing extreme losses before they happen, you desensitize your panic response, so when adversity strikes, your brain reacts calmly rather than impulsively. Reframing. Stop labeling trades as wins or losses. The market is not a judgment of your intelligence or worth. Every trade is a data point, a single experiment in a probability lab. This mental shift reduces emotional swings, helping you focus on process over outcome. Master these techniques, and you're not just trading charts, you're waging mental warfare against your own instincts, rewiring your responses, and gaining an edge that most traders will never achieve. Trading psychology is reverse engineering the brain. To master trading psychology, you need to hack your brain, not by suppressing emotions, but by redesigning your decision-making circuits. It takes time, like learning a new language or building muscle. And no one can do it for you. That's why psychology is the final, unbreakable frontier in trading. Not because it's less important, but because it's a lifelong project, one that continues even after you've mastered the markets. Let's be honest. Your biggest problem isn't that you don't know you should be patient, or that you don't know you shouldn't be greedy. The real problem is that in that critical moment, when everything's on the line, all that knowledge disappears, swallowed by the fog of emotion. It's a paradox. To succeed in the markets, you have to overcome human nature, while still being human yourself. Books tell you, be rational. But when real money is on the table, your ancient brain takes over. Fear and greed start shouting for survival, not profitability. Acting on these principles is hard, because you're fighting the neurowiring that's been shaped over thousands of years. When you fear giving back profits or keep chasing more out of greed, it's not a moral failure. It's biology. So what's the solution? Training, turning awareness into instinct. You can't just read these principles. You have to burn them into your system. You need a trading plan so deeply ingrained that in a moment of crisis, you don't think, you just act. Like a fighter pilot reacting to a missile launch, guided not by fear, but by deep conditioning. This is an inner journey. Not to find shortcuts, but to become the kind of person worthy of wealth.